Given the ever-present profit motive, do you think investors can actually make a material difference over the long term to the sustainability of the planet?
Oh, absolutely. No question about it. I think investors are probably, after companies, it would be the single most powerful force. I would put investors ahead of regulators. And I'll tell you how they could do it.
Yeah, because we're not seeing it now, are we?
You're not seeing it now. And I think what will start to affect the behavior of investors will be when the very large asset owners that hire the asset managers and manage the money themselves, as they are increasingly recognizing the importance of the ESG factors, when they start integrating that into their investment decision-making process, and then they explicitly are asking companies for that information, and they are basically calling on the regulators, the securities regulators that companies provide this information, then they can be a tremendous force for change. So investors are important, but a company's license to operate comes from civil society. And so as civil society is increasingly concerned about issues, and you see this a lot, that changes expectations of investors.
Yeah.
That changes expectations of companies. And so one of the things that could shift, there's trillions of dollars that's passing from, my generation, and maybe your generation a little bit, you're younger than I am, to the next generation. Those people are the ones that are talking about impact investing.
Yeah.
So you start to see these family offices, and you see people that are investing their own money, mutual funds that take this into account. So there's potentially the hope is in a generational shift. As those people start taking into account ESG issues in their own investment decisions, the way they're already taking it into account in terms of where they go to work and in terms of the products that they buy, that's where you could start to see that curve of money being managed that's being directed towards investing in companies go up a lot.
Is there evidence in the real world that investors are actually using ESG data to make investment decisions?
So I think the answer is yes, but you have to qualify which part of the investment world. I think you see increasing interest on the part of the big state pension funds, both in terms of the assets that they manage and the mandates that they give their asset managers. You're seeing some of the large money managers in this country and other countries that are starting to develop basically products around sustainable investing and responsible investing. That's happening now. I think where you see evidence of strong interest in sustainability from an investor point of view is in the next generation.
Okay.
The people that will be inheriting the wealth, large family offices. There's a project going on here. Trillions of dollars are going to go from one generation to the next.
These are millennials and the
These
generations
are
after.
millennials and
Yeah.
Generation Z or whatever the
Yeah.
next one is, right?
Yeah.
And they're looking at it now,
Yeah.
and they are asking the question of how do
Yeah.
I make sure that these assets are being, invested in a responsible way from a sustainability
So it's
point
investors of the future and not too distant future.
of view. Not too distant future.
Yeah.
And then you have in that same generation people that don't have the massive wealth from the family offices.
Yeah.
They're thinking about that right now, and you see asset managers starting to create products that are targeted towards those people.
What about from a regulatory perspective? Are regulatory agencies, Environmental Protection Agency, for example, are they starting to take an interest in ESG disclosure, ESG risk as reported by companies?
I think you could say that there's been a increased awareness of regulation around environmental, social, and governance issues that are the critical things for that sector. Those don't necessarily translate into reporting,
Okay.
particularly in things like a corporate reporting context, because the SEC controls that in the United States. They can ask for those data from companies as a regulator.
And
but
have
that-
they?
They do, but that doesn't necessarily mean it's in the public domain.
In large, looking at, say, the European sector, the American economy, and the financial regulators for the American economy, including the SEC, other economies such as South Africa and Southeast Asia, how would you describe our progress from a regulatory perspective?
Oh, the progress would be modest at best,
Okay.
And non-existent at worst. Probably the most significant regulatory initiative, it was really a corporate governance initiative, would be in South Africa under
Okay.
King III, where every company listed on the Johannesburg Stock Exchange has to file an integrated report on a apply or explain basis, they say. The EU last year passed an accounting directive on non-financial information.
Yep.
That says that every company with 500 or more employees, public or private, needs to provide ESG data on an annual basis. It goes into effect a couple years. Each member state will determine, kind of how to interpret that regulation. They're looking for guidance. A couple years ago, the Chinese Securities Regulatory Commission mandated CSR reporting.
Yeah.
I don't know how good it is because I don't read Chinese.
Okay.
The only thing that's happened in the U.S. in recent memory was about 3 or 4 years ago, the SEC published the interpretive release on climate change.
Yeah.
And essentially what the release did says go back and reread Regulation SK.
Okay.
Right? There was no new regulation. It didn't demand any new disclosure requirements. It just basically said Regulation SK gives guidance on material disclosures for your 10K filing, which is the official filing document.
Yeah.
And it created this huge hullabaloo.
Yeah.
So ask yourself the question, if the sector is constant, how can it be that some companies don't think they have to report it at all, and you can go all the way to the other end and people can actually come up with metrics?
Yeah.
I mean, that's one of the reasons why the Sustainability Accounting Standards Board was started, which is to give companies guidance, because if investors are going to start seeing information reported on ESG issues and it's disclosed in the 10K,
Yep.
that's when you're going to, I think, be able to start mobilizing the forces of the investment community more, which is where we started. Here's what you get in the investment community and the corporate community. It's this sort of finger-pointing thing where the companies say the investors don't give us credit for sustainability, for our ESG performance. The investors say, well, companies don't give us very good information. It's hard to find. They don't talk about it in their quarterly calls. All they want to talk about is earnings. So there's kind of a communications gap going on. But I think the onus goes on the companies in the end, because it's the companies who determine what the disclosures are. And companies think they have to make the business case for mergers, acquisitions, big R&D investments going to new companies. Why shouldn't they have to make the business case for sustainability? And I think when the business community starts to do so more forcefully, you'll get more of the investment community looking at that, and you'll get more assets that are going to be taking that kind of information into account.